The cryptocurrency market is preparing for an incredibly volatile end of month as we are coming up on one of the most important monthly candle closes we have had in numerous years. Will the bears be able to drag Bitcoin's price under 30,000, or are the bulls going to be able to maintain this level as support? Let's go ahead and find out. Okay guys, welcome back to the channel. I hope you're all having a fantastic day. The market is going to be heating up very soon with the monthly candle close just around the corner and Bitcoin holding on to 30,000 for dear life. We are expecting a volatile move to occur upon that monthly close. In today's video, we're going to be discussing what we expect from the short-term price action and macro price action in regards to the monthly close and a current price action on the charts. We're also going to be discussing the news events, the contracts, and so much more. Before we get into it, smash the like button, hit the comment button, and subscribe to the channel. We post daily videos on Bitcoin focusing on the facts, the charts, the technical and structural information, the news events, the economy, and the market as a whole. No hype, no BS, no emotion, pure raw TA. If that is the kind of content you are interested in, join us on Telegram as well. We have our Telegram channel. It is the second link down below. You'll get access to charts, updates, videos, educational posts, news events, and so much more to keep you in the loop with not only Bitcoin, not only cryptocurrency, but all the relevant economic information you need to navigate the markets. If you're interested in joining our VIP channel, where we post trading signals with exact entries, exact targets, exact stop losses, we have trade justification with that and exclusive charts. We post a minimum of 20 trades per month. As you can see, our last month trades, we did 34 trades, 26 wins, 8 losses for 76% win rate, and our entirety of our VIP trading track record can be found over here. We can see we've done VIP for now 29 months. We have an average win rate of 79.28%. If you're interested in joining the VIP channel, there's no better time than now, as we do have a 10 to 40% off sale. Go ahead and contact me and you can find more membership details right over here if you need to. Let's get into the video, starting off on the market data. And as you know, guys, we are coming very close to the monthly candle close now. We are within 48 hours, and a lot is going to happen as we do have 150,000 plus contract options expiring this Friday, which happens to be around that monthly candle close. And again, we'll discuss a little bit more about that later in regards to how it can impact the price upon that monthly candle close. Looking at the quarter, we are a quarter two, we're up 6.09%, absolutely fantastic. Not only do we have the monthly close, we also do have that quarterly close. For the month of June, we are up 10.83%, looking very good so far, sitting just above 30,000. Actually, the time of filming this, Bitcoin is sitting at $30,106. Looking at our 24-hour liquidations, it is up 42% to 108 million. And as we said, we don't really need to see big moves on the market right now to see a lot of liquidations, as people are massively over leveraged above 30,000. Any sort of correction downwards here below 29.8, below 30,000 will result in a massive amount of liquidations. Any sort of move upwards here will also result in a massive amount of liquidations. The market is really between a rock and a hard place, and it is pulling and pushing on both sides. Looking at volume, we can see volume is down 5.61% at 74 billion. So it is quite rare when you see volume down and liquidations up. It does suggest the current consolidation is massively over leveraged. Looking at our volatility index, again, we're not really expecting too much to happen here. We would like to see our volatility index slightly move upwards, and we have seen the 30-day move upwards, and it is slowly moving downwards as we are consolidating now. And we have been consolidating, just going to check on this chart, for about 7 to 10 days. So we have been consolidating, and therefore that smaller time frame period, that 30-day period, will start to move down with it. For the 60-day period, it would be nice to see the volatility index move upwards. However, we're more or less pushing sideways. Moving on to our liquidations, we can see from the 72 million in liquidations, from our 108 million liquidations, we can see a absolutely astronomical amount of long liquidations in comparison to short liquidations. And that was really on that wick toward the downside yesterday. If we zoom into the smaller time frame and take a look, we did see quite an aggressive move under 30,000. We went only very temporarily under 30,000 right over here. Went down to around 29,836. And you can see just how many longs are actually positioned here just by an incredibly small move under 30,000. You know, we're looking at 0.5% move under 30,000, wiped off an astronomical amount of longs. So the market is heavily over leveraged here in both positions for both shorts and for longs, and any sort of move in either direction is going to trigger a volatile and explosive move. And we'll discuss what the trigger of that could be in today's video with those options expiring. But let's get into the broad markets and we'll wrap it back to Bitcoin at the end. So the DXY is moving upwards. Of course, it is nice to see the DXY move upwards. Again, that is not really good for the market. It's not really good for cryptocurrency or the stock market. But again, it is respecting our technical levels, which is nice to see. We did expect a bounce from our support over here. We do expect the price to move upwards to our dollar trend line. If we do fail to break out of that dollar trend line, we do expect a rejection and continuation downwards. But so far, it is confirming the 4-point rule. So we have 2, we have 3, and usually on a 4th retest, we do eventually see a breakout, and therefore the likelihood of a breakout on the next retest is actually quite high. Now, the DXY has been moving upwards, of course, as we did have the Jerome Powell Fed talk recently, saying that they're not aggressive enough. They're more likely to ramp up these rates again to tackle the rise in inflation, to really kick inflation down on the curve and stop it in its track. And they need to be more aggressive to do so. So that gives a indication or a potential perspective into the future of interest rate hikes, which could actually be going back up again. So we could see a second wave of interest rate hikes. Of course, if interest rates go back up again, the cost of debt rises, the DXY and the strength of the dollar rises, and that results in an unfavorable environment for risk assets, and actually could suppress Bitcoin and drag the market down. We'll discuss that in another video. Maybe I'll go into a lot more depth on it. If you do want to find out more about that, go to our channel. I think 4 or 5 videos ago, we did a video about how interest rates and impact the market, how it impacts Bitcoin specifically in regards to a whole variety of different economic models, and we really go through it in massive amount of detail. But looking at it from a face value, guys, you can really just expect the DXY moves upwards past this resistance. This will be bearish. If it rejects and moves downwards, this will be generally bullish. Okay, we'll keep it nice and simple for today. Moving on, S&P 500 is still not looking very good over here. Again, we bounced very temporarily down over here around 4,350. Again, not really too significant. We do need to start clearing these highs of here to continue upwards. At the moment, this is going to be a nice area of resistance, corresponding with our level over here of resistance all the way back in April 2022. We can see we do have temporary support at this level at around 4,300, as well as a support confluence of our uptrending support line, our VIPV range, and our horizontal support down around 4,200, and therefore that will be a very realistic target if the S&P 500 does correct. If we do happen to lose this level and lose that VIPV POC, we can expect a move into this range and to fill this gap. But of course, that is weeks away, nothing to discuss right now. In terms of the structure, this is a bearish structure, so the S&P 500 is more bearish. Like we said already, guys, from a few days ago, we were saying as we reached this level here, it was maybe a couple days ago, the 15th or so of June, we said right now we should be looking for shorts on here. The risk return in favor of shorts is significantly better than longs. If we do want to see the price move upwards again, we need to invalidate this uptrending resistance, therefore break a weekly candle above and get over these high points over here. Breaking over 4,500 on the weekly will be absolutely necessary to invalidate the liquidity zone and turn it into support, then continuing upwards. The same goes for the Dow Jones, guys. We are sitting underneath our resistance. We can expect a move toward the downside. A loss of its uptrending support level will result in a continuation downwards. And of course, if we do get some candles on weekly candles above this level, we can expect a move as high as 362. But we do expect a downward move over here. Moving on to Bitcoin, guys, let's get into it. So first and foremost, let's talk about the monthly close. Actually, before we do that, I want to talk about one more thing. And I'll actually go ahead and leave this link down in the Telegram channel. If you want to go check it out, I'll put this link in the Telegram after the video. This, of course, is a link to CoinDesk discussing the upcoming Bitcoin contract options expiring. We have a whole heap of expiring contracts very soon. In fact, we have 150,633 Bitcoin options expiring worth 4.57 billion, expiring again on Friday, 8 a.m. UTC time. Now, according to this article, I'll just summarize it over here. You can go ahead and read it at the end of the video, but in other words, if Bitcoin builds momentum of 30,000 as expiry approaches, dealers will buy the cryptocurrency in the spot and futures market. That in turn could lead to an exaggerated price rally, often called a gamma squeeze or a slingshot effect. On the flip side, dealers will be forced to sell on a potential decline below 30. So what it's saying is 30,000 is an area of massive importance for the bulls to hold above. If the bulls cannot hold the price above 30,000, we're going to see a violent correction from 30,000, potentially down to about 28. We'll discuss that in today's video. But if the bulls can keep the price over 30,000 until that monthly candle close, and on that monthly candle close, we're going to see a slingshot effect for a move back upwards, a strong impulse upwards over the next few days or weeks, and it could really put us in that macro uptrend. Like we said already, 30,000 monthly close is such an important level to push Bitcoin's price higher. So let's talk about the monthly close, and then we'll get into the smaller time frame price action and discuss not only the higher targets, not only the lower targets, but from a technical level, what we need to see for the slingshot effect to occur, what we need to see for bears to bring the price on the 30,000. But before we do any of that, we need to understand why 30,000 is important and our targets on the macro scale from 30,000. I wanted to briefly interrupt today's video to discuss my favorite exchange, Bitget. If you're looking for a safe, honest, reliable, and accurate exchange, look no further than Bitget. You can sign up by the link in the description to support the channel and get access to 3 exclusive perks. That being up to $5,005 in trading rewards, up to 15% discount on your trading fees, and exclusive access to our MegaWhale promotion campaigns that we run every few months. Alongside that, guys, Bitget is a non-KYC exchange, meaning you do not have to KYC. It is completely optional. Bitget also has a protection fund that secures user assets against external hacks and threats in the space. Alongside that, guys, Bitget offers up to 125x leverage on futures with extensive amount of trading pairs and liquidity on the market. I highly recommend signing up to Bitget. It is the exchange I've been using for over a year and a half now, including all of our members. If you're interested in signing up, trading there, and supporting the channel, you can do so with the link in the description. Thanks for listening. So to do so, let's take a look at our monthly chart. Now, a lot of viewers on this channel would have seen us go through all of this before, but I would highly recommend just checking it out again, because it is really important to sometimes rewatch things and really hammer it in your mind to understand just how important these levels are. The more you understand something, the better you're going to be able to make decisions when the time comes. You're not going to be sitting there on your hands, trying to make decisions in the moment. Anything you do when trading, whether it be scalp trading, day trading, swing trading, whatever it is, you need to have premeditated plans with a whole variety of different premeditated possibilities so you can act on those possibilities when they occur. It is not about being right, it is about making money. Okay, let's take a look, guys. 30,000 is a key level of horizontal support on the monthly chart, just as we have seen before. We have seen prior levels of horizontal support on the macro monthly chart in the last cycles. If we look at these red phases, this is, of course, is going to be our bear cycle, our bear phase in the bull run, okay? We see we have a strong level of support that is formulated during that bear market. This is represented by the horizontal red line. Every time we close a monthly candle or push under it, we see capitulation. This capitulation takes us down an aggressive correction, 40-50% down towards our bottom. This forms a bottom in the bear run, a bottom of the bear market where a new uptrend could develop. It starts from a daily uptrend into a weekly uptrend. Eventually, it moves into a monthly uptrend. If we look at the time scale of where we are, the daily uptrend, we have that. The weekly uptrend, we have that. The monthly uptrend, we are almost there. We're developing the monthly uptrend. We're about to confirm the monthly uptrend. At what point does a monthly uptrend validate? Well, you guessed it. It is going to be the break above that horizontal area of resistance. If you think about it, guys, strong support, which is this over here, very strong support, becomes incredibly strong resistance. And when strong resistance breaks, you have a surge in momentum and volatility and volume that can push the price in that direction upwards. Not only that, but that strong resistance now becomes a strong support. So flipping this level will require a monthly candle close above that 30,000 level. If we get that monthly candle close above that level, we will have broken out of that horizontal resistance, which has basically been acting as a key level for around 900 plus day, guys. We're looking at around 900 days, 30 months on the chart over here. It has acted as either a key level of resistance or a key level of support, depending on what side that price is going to be acting. So let's take a look, guys. Every time we break a monthly candle above, we see a strong move towards our dotted trend line. The dotted trend line represents the high point of the dead cat bounce in the bear market. So every bear market has a top, you have a local top, okay? After the top, you have a correction, and then you have your bounce, okay? The bounce high is going to be represented by the dotted trend line. What we can see every time we close a monthly candle above the horizontal red line, which is that horizontal resistance, we move upwards over the coming months toward the dotted trend line. So looking at the macro monthly chart, we are looking for a target of $48,000 if a monthly candle closes above 30,000. This is according to historical price action. Now, there are scenarios which we'll talk about today which could prevent this occurring. The market is in a very different economic position than it was in the prior two instances, which could potentially either suppress the price or prevent it from occurring at all. So really quickly, we'll come back to that note in a second, but let's assume the price moves on historical data. What we're looking at to validate that or to confirm that is going to be our weekly chart. What we see over here is our Gaussian channel. We see two very important things. We see our Gaussian channel in relation to our monthly chart, and we're looking at specifically these breakout points. So if you look at our right-hand chart over here, we can draw a little circle on that breakout point. And if you look on the left chart, you can see our crosshairs is actually lined up with that exact point of a breakout. So we have a breakout of the weekly Gaussian channel as we are breaking a monthly candle above this point. In fact, if we want to be specific, we would have broken out of the weekly chart on the Gaussian channel prior to that monthly candle close. Just as we are doing again, we are breaking out of the weekly Gaussian channel prior to the monthly candle close, suggesting that there is a probability that we do remain above 30,000. Now I'm saying a probability because nothing is certain, and we can see a scenario in which we saw back in 2016, where in fact we broke out of the Gaussian channel, okay? Right over here, we broke out over here, and we saw an extended 3 to 2 months of consolidation before we closed that monthly candle above. And in that time, we did not see the price break back into the Gaussian channel. So the key thing is here is this is not suggesting we're going to get a monthly candle close above 30,000 this month, but what it is suggesting, it is likely to come very soon. It is likely to occur before Bitcoin drops below $28,000 again. Now, like I said, this is data. This is just two instances we have seen before on Bitcoin's chart. 2 times could be a coincidence. It may not be a set pattern. We always need 3 times. So there is a scenario all of this fails, and we'll discuss that, okay? But if we're looking at the historical data, this is what we're looking for. If we're looking at these key points, this is what we're suggesting. So how could all this fail? Number one, and the most important reason, and probably the most likely reason why it could fail, is interest rates, right? If interest rates start to rise again, that will push the price of these assets down. The cost of debt will rise, the cost of living will rise. Therefore, people will be less likely to invest in risk assets and more likely to sell risk assets. Companies are more likely to off-sell their risk assets or less likely to acquire debt to purchase these assets in the first place. And that could drive the overall risk in the market downwards. That could push these asset prices downwards. So going off historical data, it looks good. Going off economic data, it is looking pretty bleak. It's not looking amazing. It's got a bit of give or take. It's about 50-50 right now. So we're keeping eyes on both these scenarios as the price develops. So let's talk about this chart over here really quickly, guys, in regards to our VRPV, in regards to our higher ranges, and then we'll talk about a smaller time frame price action. So as we said on the weekly chart, we do have indications of the price rising, but at the same time as we have these high time frame lagging indicators suggesting the price is breaking through these historical levels, we are starting to see weakness on the weekly chart. We are starting to see weakness on the daily chart more specifically, and that could develop into a correction. As we can see over here, we do have a possible double top developing on not only the weekly, but also on that daily chart. You can see right over here with a possible double top forming. But let's talk about the hypothetical scenario where we do break upwards. What we're looking for, if we can look at the VRPV here, guys, if we do break above 30,000, we can see that the VRPV is generally rising towards about 40,000, suggesting the area between this range over here and our next resistance at 40,000 is not going to be an area in which we just explode upwards in. It should be a slower grind upwards. If we look at 40,000 to 48,000, which is going to be that dotted trend line, we can see the VRP does actually drop off, and therefore this area will be more volatile than this area over here. If we look toward the downside, guys, and we expect a rejection, and hypothetically we do get a rejection and we do continue downwards, the bulls do still technically have control of the Bitcoin chart unless the price breaks under two key levels. Number one, this uptrending support level, and number two, this horizontal weekly support range. As you can see, this horizontal weekly support range is actually positioned not only underneath that uptrending support level over here, but again, it's around a 370 plus horizontal support day range. You can see on the VRPV, we have a significant chunk of support over here, suggesting a weekly buffer, meaning a loss of this level will actually put us into a bearish trend. Therefore, any sort of correction that keeps us above the this uptrending support line and this horizontal range technically keeps a bullish trend intact. The weekly trend is lost if this horizontal support level is lost. The daily trend is lost if this uptrending support level is lost. We lose the bullish weekly trend under here. We lose the bullish daily trend under the uptrending support line. Okay, if we do lose that level, that is when we expect the price to move down to 20, potentially back down to 19,000. Until then, we do expect every correction to be healthy if it does occur, and there's no doubt the charts aren't looking amazing. So let's get into a smaller time frame, guys. As we said already, we do have a lot of contracts expiring very soon, and we have shown you, as per the liquidation data, that pretty much any move that occurs under 30 or above 30,600 is going to result in massive amounts of liquidations and an incredibly volatile surge in price action. And I'm going to go ahead and show in the chart. Hypothetically, a move under this horizontal support will result in a strong move down. A move above this diagonal resistance will result in a strong move upwards. If we go back to this article here, this is what they're kind of talking about. They're talking about an exaggerated price rally called a gamma squeeze or a slingshot effect, or they're talking about an aggressive correction that could occur. This slingshot effect, this gamma squeeze they're discussing, will be occurring above this level here. And of course, a correction of violent liquidations will occur underneath this horizontal support. So we have two key levels to watch. These are acting as trigger points on the chart. A loss of this level will result in a violent correction. We're looking for targets along downward over here, so we're looking for these little gaps in the VRPV. We're looking for these little peaks over here, 29,200. We're looking for 28,900. And finally, we're looking for 24,400. And then, of course, if we break upwards, we're looking for the same horizontal resistance range before. We're looking for this red zone around 31,300 to 32,000. 32,000 being that upper resistance of this area of resistance we had right over here, all the way back in June 2022. So let's discuss the charts from a technical perspective, in terms of the bearish perspective, and then from a bullish perspective, and then wrap the video up. And hopefully by then, you've got all the information you need to navigate the upcoming price action and navigate that monthly candle close. Now, by now, you know how significant that really is. So, 4-hour chart. Let's take a look. What we're seeing is we are seeing volatility is steadily dropping. Now we know volatility is dropping as we can see the compression between the price action and the moving averages of 50 EMA specifically. We can see short-term strength is being lost as we lose these smaller time frame moving averages, and we're pushing between our 32 and our 50. So it does suggest we have a degree of compression occurring, and we have, during that compression, a lack of volatility, a loss of volatility. What we can see during this phase of decreasing momentum, because we have decreasing momentum, the price has more or less pushed sideways. And this is an initial sign of strength, right? We have seen weakness, but the weakness hasn't developed enough to push the price down. So that is a good sign for the bulls temporarily. However, that will be lost if the price loses 29.8K. 29.8K is going to be a major trigger point. You can see in the VRPV here, right over here, a huge chunk of orders representing, again, consolidation compression, and we have a massive gap towards 28.8/28.9-ish right over here. Additionally to that, we have our 50 EMA moving upwards, and therefore a loss of that level will signify a shift in strength. Again, it is not a trigger to short, it is a shift in strength. A trigger to short will be a close underneath the 29.8 level. A loss of that level actually should be enough. I won't think I'll be looking for a close. I think a loss of that level will be enough to take a short with a tight stop loss. And of course, a move toward the downside. So we're not looking too amazing here for the bulls if we lose that 29.8K level, but temporarily right now, this level is a strong support. And like we said, support is support until it's not. Resistance is resistance until it's not. And just as we have a strong support level over here, acting as a bearish trigger, it's a bearish trigger because if we lose it, we enter a bear phase, a short-term downtrend, okay? We have a strong resistance directly above us, acting as a bullish trigger, meaning if we break above it, we enter a bullish trend. So a bullish trigger, we have a bearish trigger, we're between this rock and a hard place. A volatile move is coming for Bitcoin. What we would like to see for Bitcoin to continue upwards is going to be that 12-hour candle break above this 30,700, 30,800 downtrending resistance. You can see it's acting as a daily downtrending resistance, representing a potential double top level right over here. If we draw a horizontal range from our daily close above, you can see it's sitting around 30,800. A break above this level is going to be absolutely essential for a continuation upwards. If we zoom out to higher time frames, such as the daily chart, such as the 12-hour chart, we can see that the weakness is beginning to pop up on the chart. We have our red dot over here on the market's OB, suggesting again momentum is starting to tip toward the downside. Okay, again, this is not unexpected. After we see strong moves upwards, we have compression sideways, suggesting again the price is moving toward the downside. If we look at some of our volume indicators, such as our volume delta, our CVD on the candles, we can see that again we have our volume over here moving downwards, but again, it's suggesting relative strength. We have, of course, the candles pushing higher than this previous high point over here, suggesting relative strength. But again, guys, none of this is going to matter if we do fall back below this level. That will trigger a correction in the market on the smaller time frame. Let's go down to the 12-hour chart and take one more look, and then we'll wrap up the video. So right over here, guys, we can see if we do lose that level, our lower targets are, of course, going to be these local tops. I would expect a correction down to at least 28.4. I think at this level, we have a flipping point where we decide whether or not we'll bounce again from here or if we'll correct even further. I would not like to see 28.4 lost, and I'd really not like to see 27.5 lost as a lowest. Now remember, there's one more thing I want to say. If we don't close the monthly candle above 30,000, it's not the end of the world. If you zoom out and look at the date range trend for the bull market, we technically have until April 2024 to get above 48,000. And therefore, during that time, we have numerous amounts of months to close above 30,000. So there is no rush to do it, although it would be nice to see it sooner or later. Considering the economic climate, considering what's happening with the options expiries, we are in this particular situation, especially with the overall uncertainty surrounding interest rates, where we could see this delayed, and maybe we might see it, and we might see a scenario that hasn't played out before. And I'm not trying to sit here and tell you exactly what's going to happen. I'm not a prophet. I can't read the future. I base my decisions on probabilities and risk. What we're looking at here is historical price action. If we refer it to the current price action and expect it to act how we have seen in the past, the scenarios that we said will play out. But it may not play out the way it is suggestive. It may play out a different way. What is important that you're not only analyzing the macro charts, but you're analyzing a smaller time frame to make calculated and logical decisions based on every single move possible. As a trader, it is not about being right. It's about making money, guys. So focus on what decisions you can make today. Focus on what decisions you can make now. Not focus on potentially what will happen to Bitcoin's all-time high in 10 months from now. Don't think about where Bitcoin is going to be in 5 months. Don't think about where it's going to be in a year from now. Don't try to call the exact top of the next bull run. It doesn't matter. Those decisions, that effort, that thought is not going to make you money. Focus on the now, focus on the data in front of you, and try and make every single decision you can right now the best of your ability with correct risk management, and use the probabilities and data on your side to do that. Okay, guys, thanks for watching. Hope you enjoyed. Today was a bit of a longer video, but I feel like it was necessary. But I'll catch you guys in the next one. Cheers.